So, let's talk about what is shaping up to be India's biggest financial IPO of 2025, Tata Capital. It is a massive event for the market, but here's the thing, it's also a real puzzle.
And when we say huge, we are not kidding. The total size of this issue is a staggering 15,511 crore rupees. A number that big, especially with the Tata name attached, you'd think would be a recipe for some serious excitement. And yet, that's the million-dollar question, isn't it? Because when you actually start to dig into the initial signals from the market, well, they're telling a very, very different story. All right, so let's get right into this puzzle. We're going to start with the biggest thing that has investors concerned right now. What on earth is causing this disconnect between a legendary brand and such a lukewarm reception from the market? It's this really strange contradiction, you know? On one hand, you've got the immense trust and power that comes with the Tata brand. But on the other hand, you've got these key market indicators that are basically flashing yellow warning lights, telling us that investors are pretty hesitant. To really get to the bottom of this caution, we need to look at a really crucial unofficial indicator that traders watch like a hawk. It's called the Gray Market Premium, or GMP for short. Now, for anyone who's not familiar, the GMP is basically the market's early bet on how an IPO is going to perform. So a high GMP suggests there's huge demand and everyone's expecting a big jump on listing day. A low GMP, well, it suggests pretty much the opposite. And wow, this timeline tells a really dramatic story. Back on September 26th, the GMP was at a healthy 50 rupees. But just look at what happens next. In just over a week, it completely collapses, falling all the way down into the single digits. That's not just a small drop, that's a massive erosion of confidence.
So, what does this actually mean in real terms? Well, what started out as an expectation for a solid 15% gain on listing day has now shriveled to a potential gain of less than 3%. That is a huge shift in sentiment, and it's exactly what's making any short-term investors out there really, really nervous.
But here's the thing. Market sentiment is only one side of the coin. To solve this puzzle, we have to look past all that gray market noise and zoom in on the company itself. Because when you do that, a completely different picture starts to emerge. First, let's look at the structure of the IPO. While 44% is a fresh issue, meaning new money is coming into the company, more than half of it is what's called an offer for sale, or OFS. This means the existing shareholders, mostly Tata Sons, are the ones selling their stake. For some investors, a big OFS can be a bit of a red flag, because it suggests the money isn't for company growth, but for cashing out early backers. Now, despite all that market caution, the company's financials look incredibly strong. I mean, if we look at the numbers for fiscal year 2025, we're seeing really solid growth across the board. Revenue, profits, assets under management, they're all on a steep upward climb. This is the profile of a very healthy, growing business. And the scale here is just undeniable. We're talking about India's third largest non-banking financial company. They serve over 70 lakh customers, have a huge network of branches, and a top-tier AAA credit rating. And that 37% compound annual growth in their assets, that is seriously impressive and really speaks to their operational strength. So this is the core of the dilemma, right? You've got these weak market signals that are clashing directly with rock-solid company fundamentals. And that creates two very different stories for investors. Let's put them side by side. Okay, let's break this down. The bull case, the reason to be optimistic is clear. You're betting on the unbeatable Tata brand, their fantastic financial growth, and strong demand from big institutional investors. But the bear case, the reason for caution, is just as compelling. That collapsing GMP is a real concern, and so is the large OFS, which could create a lot of supply pressure. You also have to think about potential risks in their unsecured loans and the fact that the timing of this IPO wasn't really their choice. But what's really interesting is that when you look at the experts, the people who analyze fundamentals for a living, the consensus is pretty clear. Major brokerage firms are almost all recommending subscribe. They're focusing on the long-term strength of the business over any short-term market jitters. And it's not just the brokers. The company has already raised a massive 4,642 crore rupees from big-name anchor investors. We're talking LIC, Goldman Sachs, Morgan Stanley. This is the smart money, and they are making a significant long-term bet on this company's future. So, all of this brings us to the final and, honestly, the most important part of this whole puzzle, The answer to whether this IPO is good or bad, it really just depends on one thing: what kind of investor you are. And here is a key piece of context that explains a lot of the market's hesitation. This IPO is happening because of a rule from the RBI. It requires these huge, systematically important financial companies to be publicly listed for more transparency. This means the timing was all about a deadline, not about picking the perfect market conditions. And that helps explain the muted reception. And this quote really sums up what most market analysts are thinking. The advice is to look past the noise of the GMP, look past the potential for a small pop on day one, and instead focus on the underlying value and growth potential of Tata Capital as a business. So ultimately, it really just boils down to these two paths. If you're a short-term trader who's hunting for quick listing gains, then yeah, the collapsing GMP is a major red flag, and being cautious is totally understandable. But if you're a long-term investor, you might look at the strong fundamentals and the trusted brand and think this muted opening actually looks like a really attractive entry point. And that leaves us with one final question for you to think about. When you make an investment decision, what carries more weight in your strategy? Short-term market momentum or long-term business fundamentals? The answer to that will tell you everything you need to know about the Tata Capital IPO.